Hey guys, I'm Sunit Kumar, and in this video I'm going to show you one of the most powerful price compression methods used by professional traders inside the inside the narrow range 4, inside the narrow range 7, narrow range 4, narrow range 7, and 3 T's. 3 T's, that is 3 tight candles. Nothing so special. For price action, that's a special, but name wise nothing. So this pattern often appear just before explosive breakout. I will show you exactly how to spot them on charts, how the indicator works, and how to use them for real trades. So what is price compression? See, market don't move in straight line. They compress, they expand. Like there is expansion, you see, compression, expansion, compression, expansion, compression, expansion. So when volatility contracts into very tight candles, it indicates energy building up for the next. So all these small candles we named inside the narrow range 4, narrow range 7 in the combination of both conditions inside day and narrow range 4 is IDNR4, and inside day plus narrow range 7 is IDNR7. So why are these important? Because the market has reached uh, optimal compression level, and next move is usually violent, either up or down. Let's see. Here we got uh, NR4, narrow range 4, narrow range 7, and when the price crosses above here, see the move. And how we give the move from breakout zone to here, it's around 46.69%. And in how many days? You can see in 6 or 7 candles is there. So we got fair idea about what are these candles. Inside is just nothing. Just 2 days candle high should not cross yesterday's candles high, and 2 days candles low should not close the low of the yesterday's candle. So why these patterns work? Both patterns indicate low volatility zone, and market alternate between low volatility to high volatility. So when you see IDNR4 or NR4 or IDNR7 or NR7, you are basically catching the market at the cold spring moment just before the exit. So let's see some examples. Oh, I already opened this here. So, see, expansion, contraction, expansion, and we got a nice contraction here. So you can check it for the both sides. Here, here, see the expansion. It was forming lower lows. Here it stopped, formed a base, narrow ranges, breakout, and see the move. Just check a nice 31%. See on the downside also. Here, see it was forming. It formed lower high, lower low, went up sideways, again formed a lower low, again formed a lower high. So now trend is changing. See the tight candle. NR4, NR7. Sorry, there is no NR4, NR7, NR7, and inside the NR7, we got an opportunity to sell this here and see the move. Just see the move. 10%. For short side, 10% is not small. You won't get that 50-60% move on the short side. 3, 4, 5%, 5%. Nice move because your where is your SL? Your SL will be here. Same here. Your SL will be very tight, very close. So this 5-10% will keep on uh, ringing the cash register. So this script helps identify inside days, check no rest range conditions, highlight the signal candle clearly on the chart. See here, it's an inside day and it's quite readable. It looks extended, but we can trade it. Again, a pause, narrow range, and again blast. We could have entered here also. So there is one more condition which don't occur usually. See, the 3TC, 3 tight candle. We got 3 tight candles here. As soon as it breaks above, we enter SL just below the range, lower range of 3 tight candles. Price never came back to the SL point or even the break even point, and once it cleared in 2-3 candles, straight to heaven. Again, IDNR4, one more entry. We can use it in some combination. Whenever you feel the price is really extended, uh, if we got such kind of candles after 1 or 2 candles, you can enter. But if price is already moved 30-40%, you should not be entering over here. So you can see yellow markers for NR4, blue marker for NR IDNR4, green marker for inside day, and purple for IDNR7, orange for NR7. So how to trade these setups? You see, when you see these signals on the chart, you will find a lot of signal on chart. We can't trade all these. We have to trade it in the context. Buy above the high of the signal candle, sell below the low of the signal candle. Wait for the breakout. Do not predict. With trend high probability. See, the trend is set in motion from here. It was going down, it changed direction, went sideways, again started to turn up, and we got our narrow range over here, narrow range days, and we got a very beautiful entry point. Again, we got another very beautiful entry point. You see this grouping. It was making lower low. You got this combination. You can trade it both with the tighter SL. If I am aggressive, I can even place my SL just slightly below this candle. Oh, but that is not scope of our video. Let's stick to our indicator. So don't take every signal. Use them near support or near resistance after the pullbacks in trending market. Uh, Avoid earning or very major events, or you can use also if you can handle the volatility. So that's it. If you found this helpful, like the video and comments below. I will create more tutorials on momentum burst, volatility contraction patterns, and tools I personally use for swing trading. See you in the next video. Thank you.